Welcome to the Dental Brief, the world's direct, right-to-the-point podcast produced to get you the information you need to learn and grow your practice. To learn more about our guests and find links to information discussed on our show, visit our website, dentalbrief.com. On to today's episode.
Hello, everyone. Welcome to another episode of the Dental Brief. Today, I have with me a very special guest, Joshua Kim. Joshua, say good morning.
Good morning, guys.
Hey, it's great to have you here. We appreciate you coming on the show. Joshua, I want you to kind of give a little bit about your background and how you started working with dentists and dental practice owners.
Yeah. So perfect. For everyone on the show here, my background is very specifically tied to SBA financing, SBA loans, and I'm a big believer in practicing what you preach. And so my background is actually in using SBA financing to buy my own business. When I was 19, I actually used an SBA loan to go buy a business in a post-acute healthcare sector, not directly tied to healthcare as far as dental is concerned, but I used an SBA loan to go buy that business. And going through that process, I realized that there's a lot of misinformation out there. There's a lot of lack of education by the banks when it comes to informing borrowers and what they can and can't do with these types of loans. And so, more recently, I exited those businesses and I started another business where, really my whole goal is to educate business owners about how you can leverage SBA financing for growing your own business. And, I help business owners in all industries, but especially, dentists, for accessing it. Now, whether it's you need capital to buy a building, buy a second, third, or fourth practice location, you want to refinance some debt, buy a partner out. SBA loans are objectively speaking the best bang for your buck. And it's, and that's kind of really what I do. It's my job to inform as best as I can as many business owners about what options are out there with these loans and help them, help guide them through the process of getting there. That's a little bit about what I do.
Yeah, so obviously there's cons about SBA loans, but there's also pros too, or they wouldn't be around. And I think you're right. There's a lot of bad information out there, or a lack of education about SBA loans. You talked a little bit about the uses for SBA loans and what they can be used for, but dive into that a little bit more. So, obviously in the last year, SBA has been in the news as far as, I think dentists have become more aware of SBA loans because of the EDIL loans, or the EDIL. Right?
Yeah, I know which one you're talking about. Yeah.
Too many acronyms in 2021 and 2020. So,
seriously.
The COVID bailout loan. So people became more familiar, but traditionally, I don't see a lot of startups that actually use SBA funding. Do you see startups that use SBA funding, or where is it most commonly? And most
I'm working with a dentist right now. I mean, we're getting him $1.1 million from an SBA lender to go purchase a building and get all the capital he needs to build out his office, get his equipment and stuff. You can definitely use SBA loans for practice startups. So generally speaking, what I've seen in the world of dental finance is you can go to the conventional lenders, Bank of America, Chase. You can go to all those big banks and get your first practice loan, whether it's to buy a practice or start your first one up, and they'll give you comparable terms to what SBA will. But once they cap out at about $1 million, they're not going to be able to help you too much more. And so that's really where I think SBA can come in and be a valuable resource for people, is the people who've already kind of gone that route and need something more above and beyond what a conventional lender will do. But yeah, SBA financing is definitely an option for practice startups. I'm working with a couple of people right now who are using it for theirs. It's definitely an option.
So what are the pros of using an SBA loan?
Really, I would argue, I guess you kind of framed it as if there's some cons. I mean, really the only con with an SBA loan is that you've got to personally guarantee it. But I mean, for the most part, any loan of this size in business, you're going to have some sort of personal guarantee attached to it. A lot of the other cons that most people think are there and kind of attribute to SBA loans. SBA loans are bad because this or that. A lot of the times it's just myths that have been perpetuated by, unfortunately just, bad service by some banks with some of these loan products. And so that's really kind of where I would caveat a lot of that is, it's not necessarily that the SBA loans have downsides. It's just a lot of times they're bad. But The pros of it, you've got a 10-year term. It's very flexible use. The down payments are minimal. A lot of times, if you're a dentist looking to expand, I have SBA lenders that will finance projects without any outside capital required into the project. A 100% building financing for a building purchase. A partner buyout, they'll 100% finance. There's a lot of really flexible options for it. Really the only downsides are, it is technically a government guaranteed loan. It is administered and put out by a bank. And so a lot of the negatives that people attribute to SBA loans, there's a lot of paperwork. It takes a long time to do it. If you work with the wrong banks, yes, definitely. If you work with the wrong banks, you're going to have a hard time going through your process. But if you work with the right lenders that can help you kind of navigate that on the front end, you really won't have as many issues as most people would lead you to believe with some of the experiences that they've had with SBA loans in the past.
Sure. So in other words, if you're working with a bank that isn't really an SBA lender, that's not their point of their area of expertise, and maybe you're working with a loan officer or a banker at that bank who doesn't have a lot of experience or doesn't like them, you could see how maybe that wouldn't go so well. So talk about how do you find the types of banks that really specialize in these types of loans?
Yeah, well, I mean that's really kind of where what I do with consulting with people comes in very valuably. A lot of it just comes into I had to build a lot of relationships. I had to call a lot of banks to get my first deals done, and so it was through that I built out a large Rolodex of lenders who have very specific areas of expertise. One of the biggest myths I break for people is every bank has a different credit box. Not all banks are created equal when it comes to these loans, and so. How do you identify the right lenders? A lot of it comes down to, knowing the right questions to ask. When you're calling around and asking banks, you got to ask them, how many deals have you done, with SBA financing? How many deals have you done for this industry? Of this size? And, once you can kind of filter down to a lender that has done deals in your industry of your deal size and your deal type before, then it's a lot easier. So Bank of America is one of the biggest banks in the country, but you'd be very surprised. They don't even break the top 60 when it comes to SBA lenders. They only did like 225 loans last year as a whole bank, less than $100 million. And so, a lot of people hear that and they're really surprised. Like, I would think at, Bank of America would be one of the bigger ones. It's really not the case. So a lot of it just comes down to knowing the right questions to ask the lenders on the front end. But again, that's really where I help people. Instead of them having to go take the time to do that all, I know what banks will do it. And so that's kind of where my consulting piece can come in and be helpful.
So question for you on practice loans when real estate's not involved. So in other words, they're just using that to, fund a startup, fund their equipment, fund their build out, what have you. Are those loans that can be refinanced by SBA, or does SBA not offer refinances? You
can. So are you asking, can you refinance an SBA loan with an SBA loan?
No, a non-SBA loan into an SBA loan.
Yes, you can. You definitely can. I mean, that's one of the big things that I'm doing right now for a couple of the dentists that I'm working with. They have practice loans with one bank or another bank, and they want to know, what other options are available for them to, for practice financing, especially when it comes to their buildings. The 504 loan product is the real estate. You've got two loan products with SBA. 7A you can use for everything. 504 is exclusively for real estate. Whether it's buying a building, constructing one, or doing tenant improvements to improve on a building. But those rates are much lower than what conventional lenders are charging right now, and so we're working with a lot of clients who that's what their main need is. They need help refinancing an existing mortgage at a lower rate, and SBA is a great option for them for that.
So SBA typically, forgive me if I'm wrong here, but actually, let me just ask you the question: are there usually prepayment penalties with SBA loans or no?
So yes and no. If you have a loan that is below, it comes down to the amortization period. If you have a loan that's below 15 years, there's no prepayment penalties. If you do a loan that is over 15 years, there are some prepayment penalties. It depends on the type of product. So like for a 7A loan, it's a 5-3-1. So if you prepay the loan in the first year, it's a 5% penalty. Second year, it's 3 years. The other one, it's 1 year after that, right? So as long as you don't fall in that bucket, you're fine.
So one issue I see often that happens in typical bank financing when we talk to startup practices is practices or owners not having enough in reserves due to oftentimes low cash flow from a large student loan debts. And it's not uncommon that we see $600, $700, $800, $1 million in student loans.
Yep.
How does SBA consider student loans, and how do they look at those, and then how does that affect, or I should say, what is the debt?
It's a good question. Yeah, it's a good question. So the good thing about SBA banks is they really understand the fundamentals of a business. Cash in, cash out. None of this venture capital startup funkiness that you see in a lot of deals. But the way they look at it, it's just global cash flow. So they're looking at the business from the perspective of how much cash flow is available to service the business side of the debt as well as the personal side. So they would basically just do an underwriting based on, okay, you have, I don't know, let's call it X. You have X amount of money that needs to go per month to student loans. Let's say it's, I don't know, $2,500. Okay. So when they're underwriting the whole deal, they're going to factor that into your personal expenses. So like, let's say you're an associate dentist, you've got some student loans, and you want to go buy a practice from, maybe the dentist you're working for right now, right? So what you would do in that case is you would go to them and say, okay, here's the cash flow that we're going to have monthly from the practice. Let's say the practice has $50,000 a month cash flow. We'll just round it out, to be even. And you're going to buy it at a number where the amount you're borrowing is $15,000 a month. The way they would underwrite that, they would just look at the cash flow from the practice and say, is it enough to cover the bank loan for the business, as well as is it enough to give the borrower enough wiggle room, enough money in the door from the practice to be able to cover all their other expenses. So they would just underwrite it with global cash flow. But as long as you're not delinquent on it, and I will caveat that is something that is something you got to be wary of. If you're delinquent on a government guaranteed loan of any kind, it can screw up your ability to get an SBA loan because it is a government guaranteed loan. But as long as you're not delinquent on it, you're fine.
So last question that I have for you is start to finish, from the approval process or from the time you submit an application with SBA to the time that you're able to fund the loan. What do those turn times usually look like?
It depends. So I have lenders that I work with, like if it's under $350,000, we do, we steer a lot of borrowers towards what is called the 7A small loan product. Not a lot of banks really do it, which, has kind of been something I never really understood, because I thought it was really a great option for borrowers who didn't want to go through the full process. The benefit with the SBA 7A small loan product is that it's an expedited underwriting. So you can get the underwriting done in a much quicker period of time. And so start to finish on those can be done in 3 weeks. The typical SBA loan is usually closer to 45 days. But again, a lot of it really depends on the type of loan. If you're buying a practice or buying a building, there's obviously more moving pieces to that deal than there would be if it was just you're getting a working capital loan. But what I will tell people is the deals can close quicker. A lot of it is just going to depend on how quick the borrower is on procuring a lot of their documents, because the bank can usually turn the approval around from application to approval in about 2, maybe 3 weeks. If they're slower, they're backed up. What usually is the holdup on most deals is the borrowers don't have all the documents together that they need to actually go forward with a closing. They don't have their insurance documents together, their lease, or maybe they can't find certain financial documents because their accountant doesn't have it. Whatever the problem might be, I mean, that's usually what holds up a closing. It's usually not the bank's fault.
Sure, that makes sense. Joshua, we've got a few minutes left. What else do you want to tell our borrowers about SBA loans and why they need to consider them?
Yeah, so one of the big things right now is that the SBA will actually pay you to borrow money through the 7A and 504 program. It kind of sounds pretty crazy, but as part of the December stimulus package that they put together, the December 2020 stimulus package, the CARES Act 2.0, they added a lot of things with EIDL, PPP, and some of these other things. But one of the key provisions that they extended that a lot of people knew about was they're actually covering the first 6 months of the loan for you as a borrower, and they're waiving the guarantee fee. So the guarantee fee is how the SBA doesn't lose a lot of money last year every year on the loans that go bad. So they just charge an insurance premium of 3.5% to 3.75% on every loan. That just gets rolled into your loan, and that's just basically the cost of doing business with the SBA, right? But right now, because the government recognizes economic conditions are, a little bit unsettled, and they determined it would be better to waive those just to encourage more money to be lent for more business owners. So if you pair that savings with the 6 months of payments that they will cover for you, if you go borrow $500,000 right now, the savings on that are worth about $50,000. About 10% of the loan is effectively being subsidized, with these programs. Wow. So yeah, it's something pretty major for a business owner to have that option. So Yeah, I mean that's something I would throw out there as a big option. And I think the biggest thing that I like I said before, that I run into with people is they just they're not really educated by lenders about what you can really do with these, because a lot of what it comes down to is just the lenders are so busy juggling all the deals that they have coming in the door anyway, right? They don't have time to go out there and really sit down and educate a business owner, a borrower, an existing borrower, an existing client, or a potential client about what you can really do with these. And so that's really where I think they kind of fail a lot of borrowers, by not, truly educating them on what you could be doing. And so that's kind of what the goal of what we do is we help you understand all those things. But yeah, like I said, I mean, that's all these incentives are out there, but the banks are so busy with everything they're doing, they don't have the time to go out there and talk about these things. But yeah, if you need to borrow money, now's the time to do it.
Sure. Josh, I want to thank you very much for coming on. Joshua Kim with 7accelerator.com. Joshua, thanks for being here.
Yes, thanks.
Thank you for joining us on today's episode. Did you know you can weigh in on today's topic on Facebook? Search The Dental Brief on Facebook or visit our website, dentalbrief.com, and just follow the link. We look forward to having you join us again on another episode of The Dental Brief.